Good afternoon, everyone. Welcome to Offices Adda 24/7. My name is Niharika Walia Patnagar, and I am with you with the era of AFM, that is Accounting and Financial Management for Bankers. Please confirm if I'm audible as well as visible to you. Done. So I hope I'm audible as well as visible. So let's begin with the class today. I am going to talk about AFM and we'll be starting with the next set of MCQs. So let's begin with it right away. First of all, here comes the first question. The first question is about rupees 200 paid as wages for erecting a machine should be debited to. If I erect a specific machine and the particular amount that should be debited to is repair account, capital account, machine account or furniture account. See, when I prepare something, when I'm preparing something, the most important thing is that if I am erecting a specific machine, then it should be debited to. If this is these wages are important in order to create that machine, in order to assemble that machine, to complete that machine and make it ready to go, right, to ready to use there. So in this case, this should be a part of the machine itself. The correct answer is B, that is machine account, right? Next question. Rupees 2500 spent on overhaul of machine. See, I bought a second-hand machine now. Well, for that second-hand machine that I've started using, it would be a little difficult to use it now. But this happens that when we buy something new, then there is one or the other problem while using it. So we need to overhaul or service it before we start using it. So that would be covered under capital expenditure, deferred revenue expenditure, or none of the above. So when we talk about this, rupees 2500 was spent on the overhaul. That means to make it to ready to use, because we have got a second hand machine and to start using it we have to do all these things. So this would be a part of the capital expenditure. This is the point where we are going to take this in machinery account itself. Okay? Done? So let's move on and talk about the next part. The correct answer is capital expenditure. Okay, if you like this particular session, please go ahead and share it with others. And at the same time, if you are watching this session, then please don't forget to answer, because it's really important to make it more participative. Not only for you, it would be something which is very important. It is for me as well. That keeps the class lively, right? So the next question is, all of the following are the functions of accounting except decision making, measurement, forecasting, or ledger posting. So in this case, what would be the answer? In this case, decision making, measurement, as well as forecasting. All these 3 points are covered under the accounting itself. In terms of accounting, what do we do? I have to decide what should I do with the money. I should decide what do I do with the money there. How do I measure it in terms of money? Then forecasting is looking into the future, and the last point is ledger posting. Ledger posting means we post it in the form of ledger there. Okay, so in this case the correct answer is ledger posting. Okay, next point. On March 31st, 2010, after the sale of goods worth rupees 2000, he's left with a closing inventory of 10,000. That means the organization has sold a good amount of goods already, and they are left with 10,000 units. है ना? Rupees 10,000, sorry. This is not units, this is rupees 10,000. So if you, after selling all the goods that you have, you are left with hardly 10,000 rupees. What will it be called? An event, a transaction as well as an event, or neither a transaction nor an event. In this case, the correct answer would be it's an event. It's a resultant. Since we have sold the goods, that is why it is happening like this now. So in this case, the correct answer would be it's an event. Next question. The financial statements only consider what? The financial statements consider assets expressed in terms of monetary terms, liabilities expressed in the monetary terms, assets expressed in the monetary terms, or assets and liabilities expressed in the monetary terms. So what would be the point? When we talk about financial statements now, the financial statements are always prepared in monetary terms, which consists of both assets and liabilities. And if the question would have stated it, it would have been related to profit as well as loss. Right? So in this case, what would be the correct answer? The correct answer would be D. Assets and liabilities, which are in terms of money. Now comes the next question. We purchased a car for rupees 5 lakh, making a down payment of 1 lakh. Okay, I got a particular car of rupees 5 lakh and I have paid rupees 1 lakh right away, right? So if I've paid 1 lakh right away, signing as 4 lakh, bills payable due is in 60 days. That means, okay, 4 lakh is still pending. In this case, what is happening is 4 lakh is still pending, right? And I have got a particular asset of rupees 5 lakh, है ना? But at the same time, I have lost cash worth rupees 1 lakh. Isn't it? Since I got the car of rupees 5 lakh and I lost the cash of rupees 1 lakh, technically I'm losing only, na? And I'm gaining as well. So the net of the assets is 4 lakh. So I got assets worth rupees 4 lakh, but I have to pay it to someone as well now. At this point of time, I agree to that particular person that I promise to pay you this much amount of money after this much amount of time. I am agreeing that I will make the payment to that person, but not right now, but in the upcoming future. Right? So this is called bills payable. It's a liability to us, isn't it? So if it's a liability to us, how will it be recorded? It would be recorded as the total assets have increased by 4 lakh. Corresponding increase in the liabilities is of 4 lakh rupees as well. Doing it again, everyone. In this case, the first thing that has happened is I have both. I have got an asset worth rupees 5 lakh, but I lost cash worth rupees 1 lakh. I lost cash and I gained car on the asset side. On the liability side, I have got a bills payable. There's a pressure on me that I have to pay the person 4 lakh rupees overall. So I've got 4 lakh here and 5 lakh minus 1 lakh here. So what is the amount in this case, everyone? Right? So in this case, the correct answer would be both. This is a part of accounting equations, also called the balance sheet equation. How do we look at it? We look at it as if, in this case, whatever capital is there in the business plus all the liabilities that we possess is equal to the assets that the organization owns. So capital plus liabilities makes up our assets. Next, the debt written off as bad if recovered subsequently are. If there is a specific debt that we have recovered from the people. So basically what happened is, there was a particular person, Mr. R. Mr. R was supposed to pay me rupees 10,000. And he has turned insolvent now. He cannot pay even a single penny to me. He said that, ma'am, I said, Hanji sir. He said that, ma'am, I can pay you hardly 30 paise in a rupee. So he turned bad. So what happened is, the 70% of that amount, that is 7,000 rupees, had turned bad debt. In my books, I cannot ask Mr. R anymore about these 7,000 rupees because court has discharged him from my liability. So he's free from my side. The moment he's free from my side, what happens after that? The moment he's free from my side, now the next thing that happens is the debt written off as bad. He is already cleared from my books of accounts. After years, I get money back from him. So when I get the money back from him, that particular money will turn into what? That particular money will become cash to bad debts. In this case, I will receive cash. But in this case, my losses are recovered, which I didn't expect to be recovered. So in this case, what would be the correct answer? So in this case, the correct answer would be, I have recovered the bad debts. So in this case, the correct answer would be cash to bad debts recovered. Next question. A withdrawal of cash from business by the proprietor should be credited to. See, being a proprietor, I withdrew some cash from the business. So what am I doing in this case, everyone? I have withdrew some cash from the business there. If I withdrew the cash from the business, it would be in what basis? That is, the withdrawal of cash from business by the proprietor should be credited to. Where should be credited to? It is basically drawings to cash. Because I have withdrew money from the business, I am losing cash. So debit what comes in, credit what goes out. So in this case, the answer would be cash there. So that is C. That cash comes on the credit side. Next question. This is a question from the area of Unit 1, which talks about the contra entries are passed only when. The contra entries are passed only when double column cash book is prepared with cash and discount column, 3-column cash book is prepared, simple column cash book is prepared, or none of the above. When we talk about contra entries, contra means it has both the cash and the bank. In terms of cash book, we prepare a specific book called cash book, which contains both the cash column as well as bank column. It can be single column cash book which has only cash or only bank. It can have double column cash book which can be both cash and bank, or it can also have the third element called discount. It can also have cash and discount and also can have bank and discount. Third is triple column cash book. Under triple column cash book, we prepare 1, 2 and 3. All these 3 are shown there. Right now, we prepare double column cash book rather than going out for triple column cash book. That means in the double column itself, they have started showing only cash and bank. The discount column is not prepared anymore. So in this case, When we talk about contra entries, these are contradictory entries which have both the debit and the credit in the same ledger but in different columns. So one can be in cash, one can be in bank. So in this case, the correct answer is 3-column cash book. Next question, everyone. The economic life of the enterprise is split into period or as per period interval as per the dash concept. In this case, we are assuming that the life of the particular asset is going to be divided into different portions. How do we divide it into different portions? How do we do that, everyone? If we talk about the life of the particular asset and we dividing it into different portions there, it is based upon, that means first year, second year, third year, fourth year. It is based upon periodicity. Okay? It is based upon periodicity. That's called periodicity concept. Next point. The accounting policies refer to as specific accounting principles, methods of applying those principles, both A and B or none of the above. In terms of accounting policies, we refer to a specific accounting. This can be principle, it can be something which is methods of applying those principles. It is actually both. It can be conventions, it can be principles, it can be methods, so it can be any of those things. So in this case, the correct answer is C, both A as well as B. Next point, dividend are usually paid as a percentage of. When we pay dividends, dividend is a chunk of profit which is given to the shareholders of the organization. Who are the shareholders? The ultimate owners of the organization are called shareholders. So in this case, what would be the answer? Authorized share capital, net profit, paid up capital or called up capital. If we talk about the dividends which are usually paid as the percentage of, dividends are paid a percentage of. They are paid as a percentage of paid capital. If you have paid the capital only, then you will receive dividends. At this point of time, nobody has unpaid capital. You will never get the capital of an organization without paying a penny. You will have to pay before getting the shares. That is something that happens in the demat account now. So in this case, the correct answer is paid up capital. Right? Okay, if you like this particular session, then please go ahead and share it. This particular session is specifically kept for all the bankers because everybody is working during the week. So on the weekend, we are trying to keep up with the spirits that we can help you out in terms of learning these concepts in detail. In the last 2 classes, I think I've covered only the module A. Now with this particular session, I'm covering the module B as well. So it's going to be a blend of both of these. Okay? What do you mean by the petty cash? When we talk about petty cash, petty cash is something that we can look forward to as the balance of the petty cashes, an expense, income, an asset or liability. See, in terms of cash, we keep the petty cash separate. This cash is used for day-to-day working, and this one is used for the various areas of small expenses or the petty expenses that we are doing. Okay. When we talk about the petty expenses is also something that we can say wages paid to the employees, wages paid to the labor workers, and tea expenses that we are incurring every single day, courier expenses, stationery. Those are minute or small expenses, right? That is why they are called petty expenses. So you keep a little cash aside for all those chotu motu kharchas, or I can say the chote expenses, the minute expenses or minor expenses. That is why it is called an asset. Because the cash is cash. You keep it in whatever form, it is still a form of cash. Next question, that's a practical question. Consider the following for Alpha Company for the year 22-23. The cost of goods so available for sale is 1 lakh. Total sales is 80,000. Opening inventory is 20,000. GP is 25%. Closing inventory is 2,910. Okay, this has to be for 22-23. Year to be stated this way. So, what would be the answer? 80, 60, 40, 36. Now let's look at this question, everyone. Consider the following for Alpha Company. We are given cost of goods available for sale. We have to find the closing inventory. First of all, can we find, this is the cost. 1 lakh rupees is the cost of goods sold, right? Opening inventory is already given. Right? Now this case is basically total cost of goods sold which is available for sale. This is the total cost that we are incurring. Out of this, our total sales was of rupees 80,000. There's a difference between goods available for sale and this one, right? So how can we find the answer of this question? Any ideas? How do we calculate the answer of this question? In this case, our total sales is of 80,000. That means I have sold goods worth rupees 80,000. On this 80,000, I have made a profit of 25%. Changing the pen color there. I hope this one's visible. I have got goods worth rupees 80,000 that I have sold already. So if I have sold goods of this much amount, that means minus 25%. What is the amount that is left with us? 80,000 were the total goods that were sold and 25% was the cost. So in this case, what is left is 60,000. The cost of the goods that are actually sold is 60,000, right? The goods that are actually sold is of 60,000. So how can we find the purchases? So in this case, the total, the portion of the profit is of 20,000, है ना? So if I have to find the total amount of purchases, first of all, what I can do is the amount of goods that we have actually sold is 60,000. The goods which are sold, right? So in this case, what we can do is, how can we find the purchases? Purchases is basically opening stock plus purchases. All these goods are already sold. That is the cost. So in this case, I have got a cost of rupees 60,000 where the opening stock was of rupees 20,000 and the purchases were also made. So technically, can I say the purchases that were made is of 40,000 rupees? It is 60 minus 20. So in this case, the goods I have purchased is of 40,000. Oh, in this case, I have to take up 1 lakh. The goods that are available for sale is of 1 lakh. If I have already purchased goods worth rupees 1 lakh. These are the goods na total that are available for sale, while among them the opening stock was of 20,000, right? That means during the year I have purchased 80,000, and the ones that I have sold is of, out of that, how do we find the closing inventory? In this case, the COGS was of 80,000, the cost of goods sold. Sorry, it is 60,000. है ना? This was our cost. The cost of goods which are actually sold is of 60,000. If I talk about the cost of goods sold, it is of 60,000. Taking it that way. 60,000, and this is my cost of goods sold, where the opening inventory was of 20,000. The purchases that I made was of 80,000 minus closing stock, which is still unknown to me. So in this case, what would be the answer? I hope it's clearly visible. Okay, I hope it's visible in a better way now. In this question, I would be considering multiple things. The goods which are available for sale is of rupees 1 lakh, while the total sales was of rupees 80. That means technically I haven't sold all my goods and I have to find out the closing stock, isn't it? At this point of time, I have no clue I had any closing stock. So what I did was, the goods which are already sold, I found their cost. The goods which are already sold is of 60,000. I know the opening inventory. So how can we find the goods which are purchased during the year? During the year, okay, the goods which are available for sale is of rupees 1 lakh. Out of this, opening inventory was 20. That means the remaining goods were purchased during the year. That's why we have it up to 1 lakh rupees na. So 80,000 was our purchases. Using this purchases, I used the formula COGS is equal to opening stock plus purchase minus closing stock. So in this case, the correct answer will come out to be 40,000. A different looking question can definitely come up in the form of case study, having multiple questions in its set. So the question of the day is this. The correct answer is 40,000. Next question. A second-hand machinery is purchased for 10,000 rupees. Amount of 1,500 is spent on the transportation, is paid for installation. Without this, we could not install the machinery. Since without this, we could not install the machinery, what would be the price according to you? What would be the value of this particular good according to you? Basically, I got it for rupees 10,000. Then I spent 1,500 on transportation and then 1,200 on its installation. So total would be what? This all is a capital expenditure. First two questions were based upon this only. The correct answer is this is also capital expenditure, right? So in this case, what would be the correct answer? The correct answer in this case would be 12,700. Because if I get a particular machinery, to use that machinery, I have to incur certain expenses. They make it ready to use. They will make it ready to use for us. So we'll have to wait till that particular time. Okay, here comes the next question, everyone. The next question says that opening inventory is given, closing inventory is given, purchases are given, carriage on purchases are given, carriage on sales are given, rent of office is given, as well as sales. And they want you to find the GP. To find out the GP, the best way is, first of all, you write your sales. Your total sales is of 1,40,000. This amount would be shown in the trading account. It goes here, 140,700. Right? This is by sales. All the expenses on the debit side, all the incomes on the credit side. This is called a trading account. Since we have to find the ultimate profit now, so why don't make it a proper question there? This is a financial statement question. Such kind of questions are asked in the examination in the form of case studies. So let's talk about it as well. To opening stock is 20,000. So in this case, there is a closing stock that is still left. That means not everything is sold. It is of 18,000. Then two purchases. The purchases are of 85,800. The goods that are purchased, the carriage is of 2,300. So this is what we are picking up. So what would be the ultimate profit or loss? More or less, I believe we have got good money. I am taking carriage on purchases only, not on sales, because this is related to production. GP is purely P for production. It does not consider sales and sales-based expenses at all. So the office rent and the rent of office is not relevant for us. The remaining are relevant for us. So in this case, what would be the correct answer? The correct answer would be D. This is the portion of all the incomes that are related to the production and the selling. While on the credit side, on the debit side, we are booking just the expenses which are essential to produce something. We are not recording anything which does not consider the area of the incomes or expenses which are related to which are not related to your business. I hope it's visible now. Right? So in this case, what would be the correct answer, everyone? Go ahead and answer, everyone. What would be the answer ultimately? Opening stock is given. Okay, let's just remove the area of highlighter there, since I was highlighting a few things. Done? Correct, ma'am. The correct answer is D. Very good. The correct answer is D. The answer is 50,600. Next question, everyone. Miss A and B entered into a JV. Acha nahi, JV is not a part of your business there. So I think I'll skip this part and we'll move on to the next one. Look at this question. If a purchase return, there was a purchase, I purchased a few goods and I returned them. So purchase return has been wrongly posted as on the debit side of the sales return account. See, the point is, I have returned goods. Whatever comes in is on the debit side, whatever goes out is on the credit side. In this case, we are reducing our expenses. Expenses increase from the debit side, they decrease from the credit side. I was supposed to note down the purchase return, and what happened was, to the debit of the sales return account, this was debited to the sales return. What they did is they wrote it, the correct portion was this, and they wrote it as sales return, that too on the debit side. So, but has been correctly entered in the supplier's account. The person to whom I am supposed to pay less, the creditor is here debited, here it is also debited. In both the areas, I would say creditor account debit. In both these areas, the creditor is debited. The problem is, why is this sales account recorded? We have to create only the purchase. So in this case, this sales return has to be eliminated and purchase return has to be created. Isn't it? Okay. I hope the question is clearly visible now. In this case, purchase return has to be clearly created and the sales return has to be eliminated. Without it, my answer will never be correct. So what can I do to finish off such a situation there? In this case, what's happening is, on the debit side, I have got something which is not relevant for my business. On the debit side, I have got something which is not relevant for my business. So the sales return should be avoided in all the scenarios, right? So the sales return has to be eliminated and the purchase return has to be created. So in this case, I can say my debit side is more than my credit side just because I have added something which is irrelevant on the debit side. In this case, the trial balance will not match because of an error. This error is, these are detectable errors of trial balance. And this is an error of commission. It is called the error of commission. Right? Next question. In the books of manufacturing concern, an organization which is actually involved in manufacturing, the opening inventory consists of raw material, WIP, finished goods, or all of the above. When we talk about the opening inventory consists of everything because it's a manufacturing concern. A few of the goods would be already made, a few goods are still pending, a few goods have to be still prepared. So there can be anything. It can be raw material, WIP, finished goods. So all of the above are a part of the books of accounts. Okay. Then when adjusted purchases, when we see adjusted purchases in the trial balance, in trial balance there are two kinds of areas. One is purchase and the other one is adjusted purchase. If we talk about purchases, it's the normal purchase. When we see adjusted purchase, it is opening purchases, opening stock plus purchase minus closing stock. So all these three things are already included in it. The moment you actually include the closing stock, the trial balance does not consist of closing stock at all. But if you show it in one particular area, you are showing it now, you are eliminating it. That means kind of you are making the debit side a little lesser by eliminating closing stock. So you will have to show closing stock. The opening stock will not be shown, but the closing stock will be separately shown. This is another question of the day. In the trial balance, it's a rule that you do not put the closing stock at all. But if you adjust the closing stock, then you will have to write the closing stock as well in the trial balance. That's a very important rule of trial balance. Closing inventory is shown in the trial balance and not the opening inventory. Right? Okay. So that's it for the day, everyone. This is where I end my particular session. I hope this session was helpful for you. And in case you're looking forward to our classes, then why not look forward to our entire batch that we are starting with. Let's talk about our batch there. So let me show you where to go on our website www.adda247. Look at this. You just have to go here, and in this case what you need to do is you have to pick up the JAIIB and CIB, the JAIIB October 23. The batches are here itself. That means our Sankalp batch is here. The Sankalp batches again are going to start from August 4th. So the next Sankalp batch is available. So I think this is the perfect time that you should not delay any further. August and September, 2 months are left. Your exams are going to start in October. So probably you just have 2 months. Only 2 months for your preparation and nothing else. So it's wiser that you start your preparation as early as possible without any delay. Right? So there are 300 hours of live classes, 142 test series, 181 ebooks are available. So there are plenty of things that we are providing you in this area. Expert faculty, interactive classes, live classes rather, recorded videos are available. There is no specific limit on how many times you can review the video. The batch size is limited, and if you're looking forward to this particular batch, all the classes are covered here. But at this point of time, Mahapack is also having our specific benefit. Let me show you. JC80. You can use the code JC80 and apply it. This will give you 81% discount right away. That means you can buy it for 3999.80. This is the perfect time to look forward to it. So kindly do not delay and purchase it as early as possible. Along with this, if you're looking forward to it, the Maha packs are also having double validity. So what you can do is go on to the area of JAIIB Maha pack. Click on the area of buy now, use the code JC80 and you will get a discount of 80%, 81% if you're using the app. It would cost you 9406. The price would be 9406, so perfect pricing for you so that you can look forward to it in this particular time period. So kindly go ahead and check it out on our website or in our app for further details. Okay? Chaliye then. That's it for the day, everyone. We'll be meeting tomorrow. Yes, we'll be meeting tomorrow for our regular batch. So thank you so much for being there.